Hello and welcome to the Friday wrap up brought to you by David Gockstein. I'm your host, Landy, and today is May 1st, 2026. And we are going to talk about Bitcoin here and the compression that is beginning to happen here at the highs on the daily, which is indicative of a larger move based on some closing conditions that I think is pretty important. But I did want to skip forward to the monthly on the higher term timeframes here and show that yes, we did get a low set on a close. So we don't just have a swing low set now, we have a closing low set, and the swing low, of course, being at $60,000, and the closing low now at right around $67,000, a little bit under there at 66,971.54. I've discussed this before. On the lower term timeframes, the weekly and below, I am looking at this current low that is in with the higher low specifically on the weekly as kind of the breaking point for the smaller trend within the wider trend, which is that of a downtrend. And that above $98,000, that's where things get interesting, especially from a weekly standpoint. Now, this is where I would start entertaining if we did see the weekly start to trade back to $98,000 without making fresh lows below, 60K. I would start entertaining the initial outlook that I gave before the all-time high was even in, because I've been calling out this compressive structure at the highs for quite some time with, the bands kind of grinding sideways and up. We hit our target between 123 and 125 by the upper second standard deviation here. And I was looking for, a substantial move to the downside. And I had floated that, if we do break trend below the 74.4 area, that there is a possible scenario because of the compressive structure on the monthly and especially the quarterly time frame, that if certain conditions are met, and this was before the move down to 60, that we could potentially see a deviation of trend. And, essentially what I want to do today is kind of revisit that thesis. That's not my first thesis, by the way. I'm still looking at the weekly as having another leg down until proven otherwise by meeting certain closing conditions. But in this case, we've got the uptrend off of the bear market lows, right? So just quickly revisit this, and we've got the higher low that was put in on the move up to $35,000, which if you look left, right around $35,000, of course, on this candle that solidified the higher low and the market structure shift for Bitcoin, it essentially tagged the monthly overhead resistance before moving on into January of that year and swinging the lower high of the start of the bear market, right? And of course, this also tagged on the bottom side after the sell-off coming into the ETFs launching, the spot ETFs. We saw that it came back down and tagged this monthly close open, right? And then, of course, we head up into the nice uptrend, nice bull market. Very frustrating for many because many just wanted vertical green candles all the way. And that is, we had a period where we saw that prior to the halving, and then it was a grind sideways and down, set a higher low, higher high, grind sideways and down, higher low, and then a nice higher high, and now we have the lower low. So this is a trend break, and the only way for this to become a deviation would be to look to the weekly, and the conditions that I would need to see set on the weekly would be closes and holds of that $98,000 and starting to push on to the upper first standard deviation that I'm going to point out here and beyond, right? The only way for this to occur in that manner would be to create a deviation of the wider uptrend, right? And I pointed this out a while back. You can go through and scroll the timeline for my older videos. I archived them on YouTube. There's not many views there, but I do archive the videos that I put on X or Twitter on YouTube as well, just for easy reference, because it can be a little tough to scroll a timeline and find videos. But I've talked about this extensively when we were at the highs and I was looking for the high to be in, at least local, and I was willing to be late when calling, the low if we broke below the 74.4 and specifically around the 82.5 area, especially, but breaking the actual uptrend. And I mentioned, and this is now in play as a potential, I would say a lower potential. But if 60K holds as the lows, that we could potentially see this become a deviation of trend. Although I would want to see an aggressive move up, up and away. And even then, if we did get a deviation of trend and a reclaim or even a swing of the all-time high, I'd be looking for longer form consolidation in and around that area and potentially a much wider, very volatile, choppy zone on lower term time frames relative to the monthly. But that's what it would look like. All right. This is just an example. This is not my thesis. Unless we were to see $98,000 on a weekly broken and closed above and then held, and we get continuation into the $100,000 region, and then start working back to the highs, specifically taking out the high side structure on the monthly between 102.5 to essentially 109 360 here. Now, on the daily for Bitcoin, we are still just seeing the top side get hunted for liquidity. On the weekly here, we do have the uptrending structure, the two parts of a full trend here with the higher low at $65,000. Of course, that's the first high from the prior cycle. And even the $69,000 area acting as kind of an inflection point in that range that Bitcoin was in off the lows. And now Bitcoin, of course, is in higher high structure. This still is a bearish retest of overhead resistance, right? Over here, we've got the $78,000 right here. And then, of course, 80,700 in this case, but essentially lining up with the swing low that came in at 80,500. So this is still bearish. And this is not the kind of structure in price action that you would want to see to call this the actual macro low. It's too early to call that, in my opinion. And we would need to see more price action while holding the low at $60,000. And specifically, whether it would be putting in a high here and then going into, a consolidation structure, and then breaking the 98 later, or, coming down and swinging below it, of course, would be probably beget, if it was just a swing below the $60,000 area to hit the upper $50,000 area, your 57, 58Ks, and then come back up and really start to rip to the upside and then take out the structure overhead, which was, this was the first lower high in the weekly post uptrend to the all-time high, right? We had the lower low and then we had the lower high, and I would need to see that get taken out on a weekly close and then held subsequently on weekly closes from there. Maybe, shorter trips back down to find support. But that's not the view that I have right now. And this is where things are going to get pretty interesting. I know that there are many that are calling for higher price action. And quite honestly, there is the opportunity, and I'm going to show this on the daily with the compression that's happening near the highs and the resistance right now, that there is the possibility of heading up and testing the 86 to right around $89,000 where this lower high is. So we got the close and the lower high over here. And of course, that happens to coincide at least with the lower high swing with this higher low swing at 89. So really important areas. And I know that many are actually looking for a retest a little bit further up to those areas. But we're at the main overhead resistance at 78 to 80 right now after a reclaim of the swing low, and then a push into 78, and then a push into 80, of course, where we have the weekly close open and this swing lower low in this case as it relates to the trend. So let's go ahead and take a look at that compression on the daily, and let's define some conditions, especially because we'll find out very quickly what's going to occur over the weekend. If we get some volatility, there's some areas to really pay attention to right at the highs. If we start to see, price action push through there, then we're likely going to fill out the zone and go for the low 80s to maybe even mid 80s. But equally on the other side of that, we need to be very cognizant of the area of support, the target hit essentially to the downside, this move that we were looking for off of this zone anyway, right? We've gotten it now twice, and that is, an initial test of 78, moved down to essentially 74 to 76, got a little bit lower there in the upper 73s. And in this case, just testing some of the high side rejections from the tighter range here off of the low strike there. In this case, we've gotten the initial $78,000 area hit, come back down to basically 74 to 76, a move back up and then into the actual zone. We even got a close open there between the 78, in this case 4 to 80,500 to 700. And then we've gotten some daily price action and even some weekly price action in and around this overhead resistance, which is the key overhead resistance. So if we were to see Bitcoin trade and close back above right around this 78.4, I would look for the highs again, 79 to 80, and then eventually up to where this upper third standard deviation is around the 80,500 to 700. And if we start to see closes above there on the daily, we would get expansion. And I would be looking in the mid to low 80s, 82.5 at that monthly level, that monthly higher low close, to 83K, fair game. And then further up there, of course, we've got the lower high from the weekly, and that would be right around the $85,000 to $86,000, depending on your chart. Here it's 86 on spot, to right around $89,000. And you can even rope in 90 on swings or low 90s on swings. But that would be the next major overhead area of resistance. And the reason that I bring this up is I'm going to go over and look at the oil chart, and we're going to take a look at Dixie, because oil broke the downtrend. And let's just kind of get into that. Actually, no, let's wait, because let's define the downside here. So you know what my thoughts are on closes and expansion above 80,500 to 700. I would be looking for expansion into the mid to low 80s, somewhere around 82.5 to 83. And then from there, we can take it up 85 to 86, the bottom side of this overhead resistance area, and potentially even more into the upper 80s, lower 90s, somewhere around $89,000 to $90,000. Now, to the bottom side here, pay very close attention to 74. If we do drop 74 and the low side structure here, in the mid $73,000 area, I would be looking for expansion back into this area that has been found as pretty much perfect support between 70 and 72. Any kind of crack back down below there would be expansion and a bearish reclaim of this wider range down here, and really opening it up for not just a strike at the 68 to 69K here on the daily off the lows, but coming back down to test, $65,000 here, roping in the bottom side of the range, which of course on expansion would open up the entire bottom side, $65,000 to 62.5, and potentially more if that were to break down back to the lows, 58 to 60 initially, in the mid to low 50s from there, and then potentially even more for a larger leg down, especially if we got closes below the $60,000. Then I would be looking all the way down to potentially not just mid to low 50s here, but, all the way down to 48, which was the 48,240 lower high from 21 into 22 that defined the bear market there with that lower high. All right. Why am I talking about this? Well, let's reference this. What the bulls really want to see is this area get broken above and have Bitcoin start trading into the mid to low 80s. And here's why. When we head over to oil, oil is going to define the risk environment for the trade, right? And in this case, what we have here is we have a retest of the spike high into the macro overhead areas of resistance, right? At 115 to 130 being the wider zone. So we had that spike high, and then we got a trend break to the downside, lower high, lower low, and now we have a trend break back to the upside. And if we see oil even come down further, we could potentially see more risk on in markets. Of course, that would be good for Bitcoin and cryptocurrencies. But anywhere back above, back above essentially this last lower low, we'd be looking at the potential for a higher low, equal low trend reversal setup in oil. And I think that if we were to see that, we would see a risk rotation from risk on to risk off. So I would be watching oil very carefully. And what you would want to see for something like, despite what your feelings are on Bitcoin, the wider market treats it like a risk asset. It trades with tech, all that kind of stuff, right? And in this case, it's not actually trading with tech. It's trading more like a risk asset than anything else. Some tech is doing quite well. Although relevant areas of interest also of resistance for tech is actually, I guess you could draw the similarities there. But in this case, if we were to see a higher low put in on oil and then, oil start to come back up, especially on closes that maintain higher lows that maintain the 90 to 95 level for WTI here, I would be looking for a risk rotation. That would likely put in highs in the market. I've mentioned, and we got some targets hit in traditional markets to the upside that I previously have talked about. And there's more. There's still more juice left to squeeze. But what I would be paying very close attention to is if there is a higher low, and especially if it comes in above 90 to 95, that we would likely see a risk rotation that puts a high in on traditional markets and causes Bitcoin and crypto to actually see a risk rotation as well. And what you would want to see is Bitcoin trading above the 78 to 80 area in the mid to low 80s in order for it to come back down and find support on an area that was just reclaimed rather than rejecting an area of overhead resistance at the 78 to 80 and potentially recapturing the range in the mid to low 60s, right? Or mid to upper 60s rather. And with the potential for more to the mid to low 60s and even, potentially breaking structure and swinging the low or getting below the low. So that's what I'd be paying very close attention to. And this weekend's going to be pretty important because if we see a lower volatility environment for Bitcoin over the weekend and cryptocurrencies, what we'll see is that this will continue to compress on the daily. We'll see the bands continue to compress, thus defining, tightly defining the criteria for expansion into overhead resistance or expansion into downside supports. All right, so definitely something to watch over the weekend. If we did get a move over the weekend to the upside that started to break above the upper second and get that expansion into the upper third, maybe even above, great. And same for the downside, great. But if it is a lower volatility period over the weekend, we could come into the futures open on Sunday and then, of course, market open on Monday for the U.S. markets into a very tight compression that will offer up some probably nice volatility expansion coming into next week. So definitely pay attention to it. Let's go check on Dixie as well, because I mentioned that Dixie can kind of give us a little bit of an edge and as to oil. And what we saw was Dixie came up, it hit our overhead targets here, hit our 99.30, right? And then headed right back down and is now right around the daily support area of interest around that 97.90 to 98. And realistically, if this holds support and continues to the upside, pay attention to what oil's doing. Likely they're going to be moving pretty close to in tandem. Now, we didn't see this type of a violent move down in oil as it relates to Dixie in terms of the relative size of the candles and like all that kind of crap. But there's other things going on. Obviously, this has a lot to do with what was going on in Japan. Let's go ahead and head over to traditional markets. So Dow. Did get a nice close over the top side of the range that was the range consolidation before the all-time high was put in, and then came right back down. Nice higher low structure. This is going to define the trend for Dow, and he closes below 48,708 in this case, and right around the basis band. Then I would be looking for 48 for 48 and a half, and under potentially down to where the lower first is coming in to 47.8 to 48K, and 47.850 to 48. Anywhere below there, I'm starting to look towards the 47.5 region down here. And that's, anywhere between, 47.6, 5 to 6 to 47, like 250 or so. And then it's anywhere below there, right back to the weekly areas around that lower second. We start looking towards 47 and under as viable targets. Anywhere back to the upside here on continuation would be right back to the highs. 50K did not get hit, but it was basically target hit on the swing for the Friday session. And in this case, I would be looking, for that 50,500 and swing of the highs. And then we come back to it for, probably 50,008 to 51K. NASDAQ, nice move up. We talked a little bit about, the move off of the Wednesday closure back to the highs at 27.3 to 27.5. We did get that in the Thursday session. And then Friday, we got that continuation where I'd mentioned, we could see all the way to 28 or low 28s by where that upper second is. This move is still ongoing. Nice higher low structure here for NASDAQ. We got 27.7, any kind of continuation, look to 28 and then to 28, the low 28 region around 28. I would even rope in a possible swing of the upper second at 28.5. Now there is some news that could facilitate a move like that too. You can kind of see the setup. Doesn't mean that you need to pay more attention to the news. You need to pay more attention to the chart and the actual live auction. And we might get some action on futures on Sunday because it sounds as though that Congress has been notified by the administration that the special operation has ended. Now, something to understand about that, though, because I'm not going to sugarcoat things. There's a massive buildup of forces and rearmament of forces in that area, and additional forces that have been arriving. So, likely, what that is to continue the blockade, which means that if there is any kind of strikes from Iran, there might not be any strikes out of the United States during this time period, but if there is any strikes on any U.S. assets or neighbors, they can engage. Blockade is still ongoing, and I'm gonna be straight up with you. This is like a situation where all they got to do is declare a different operation name, and they can do a different special operation, and clearly define the goals for a different operation, and then they get a whole new extension. So just understand that is very much in play, and you should not take this as, oh, okay, it's all over. Markets are obviously going to recover and rip. Like, just watch carefully. I've also mentioned this, and we're going to take a look at SPY in just a second. I've also mentioned this on Spaces events, on David's show, and a few other places, is that as it relates to getting back to some sort of a normalcy when it comes to shipping for energy, right? And in this case, obviously, we're talking about oil and the Middle East as it relates to the conflict there. There is we're approaching normalization of new shipping routes, okay? So if we were to see continued, quote unquote, closures of the strait, it doesn't really matter at this point. That's about it's all speculation in the markets at that point, because we now have UAE with an easy exit out the Gulf of Oman. We've got Saudi out the Red Sea. We've got normalization of traffic coming into the United States via the Gulf of America and Alaska. We've got rerouting of shipping that's been going on for quite some time since the beginning to other places through other, straits, let's put it that way. And I've talked about demand destruction and how it doesn't matter, even if everything was all open and everybody was happy and the most rosy of outcomes that you could possibly imagine in your mind happened like right now, you're still going to see demand destruction. It's going to still continue to hit Europe and Asia much harder than it's hitting the United States, which then has a network effect on the United States, especially the harder it hits Japan. And we're going to continue to see that, and the lagging effects of that will be felt no matter what, through, I would say, even through the summer, even as far out as the summer when it comes to that. So just pay very close attention to, the strength in equities, right? Because even if we do have a situation where something happens, we have there's enough supply of oil out there. There's not enough ships. And it takes longer, of course, for those routes, for those shipping routes. It takes weeks longer for those shipping routes that are coming to the United States, specifically in the Gulf of America and those Gulf states in America. So there is ample supply, but it's going to take a while and demand destruction is natural. It naturally happens. Then there's policy driven demand destruction. And that can happen on the economic side, and then it can happen on via policy directly handed down by governments. So basically on the bank side, policies, you get policy that encourages demand destruction, and facilitates it. And then you can also get from the banking sector, and then you can get that from the actual government side of things for demand destruction. And we haven't quite seen it yet. We might be seeing a little bit on the banking side, and we might see that start to rear its head in a place like Japan. But it's going to be worth noting that has a network effect on the United States. While the rest of the world's getting hit much harder, and the United States will still feel it, right? Which means that the markets would react, and it's a matter of, when we do see corrections, what is it that's going on in the geopolitical environment, the financial environment, and that kind of stuff. And noting that we've seen very good strength in markets, and we are seeing a flight of capital to the U.S. markets as well. So what does that mean for the longer term? I think that the markets actually look pretty good. And honestly, some of the economic numbers are coming in way better than many would have expected. And in this case, when looking at SPY, we did hit 725. I mentioned here about the 720. Where were we on Wednesday? I said, pay attention, take it 5 points at a time. 715, break back above there. We're looking 720. We got 720 essentially. And then above there, look to 725. Hey, look, we got basically 725. So we've been methodically hitting those targets to the upside. Could we still see an extension of this particular move? It is blue sky territory. I would absolutely take it 5 points at a time, or maybe even more extreme move. But 725 to 730. If we see this trading above 725, this does look like a bit of a rejection, obviously, first day of the month. And we're going to see how the first week of the month plays out. But in this case, 730 to 735 would be the next major area to pay attention to by the upper second standard deviation. If you're going to ask my opinion, I'm looking at this as, again, watch oil. It was a downtrend break. Very highly likely statistically to put in a higher low. It's a matter of, does it show that higher low below 90 to 95 or above it or at it? And then we can really gauge from there whether we get immediate continuation to the current highs on WTI around that 110 to 112, which was a target hit as well. And then into run those highs, at 115 to 120, potentially more up to, 130, and maybe even more. that would look like probably some supply disruption. And if you're going to ask me, like, hey, Landy, what would supply disruption even look like at this point? There's not much happening in the Strait of Hormuz. That would look like maybe Iran trying to strike Saudi pipelines and maybe UAE pipelines. That's something. Or if we don't see that happen and it's purely a speculative move, because something kicks up in terms of conflict, kinetic conflict, that is not involving supply, then it would be more of a move in which I would think would be much shorter lived. But oil reacts very, very quickly to supply and demand disruptions, right? To the upside and downside, whatever side is being disrupted. So that's pretty much all I got for you today. I hope that you've been paying attention to these videos. We are just hitting target after target. The theses that I'm putting out there, I hope that you find balanced in terms of areas to look for to the upside and downside and the conditions that would need to be met in order to visit those areas. And I hope that you're learning a little bit more how to kind of gauge where we are in the market, even if you only trade crypto, because it's becoming ever more important to understand where the global economy is at, where the market is potentially going, to gauge, strength and weakness in crypto assets and Bitcoin. So even if that's all you're trading or holding. And if we were to see an outlier type of a situation where Bitcoin bucked the trend and shocked everyone and did something that I floated that is not out of the question, very low likelihood, but a V recovery where it was a deviation of trend on higher term timeframes like the monthly, we would need to see closes above that $98,000. And it would still come back down for a higher low structure no matter what. And that's where the opportunity would lie in a situation like that. I am not viewing this as that being the prevailing theory. I am still looking at this as being more likely, resulting in a bearish outcome, whether that be to come back down and test the low side range or maybe even swing the low, but also to include a possible additional leg down for Bitcoin. Doesn't mean that it's 100% going to happen, but that is definitely my current outlook until I see, the market structure changes that I would want to see to meet alternative conditions for a different thesis. With that being said, I hope you like and share this video out there. I hope that you comment and interact. If you have any questions or if you have any input, go ahead and give me that in the comments. And I hope to see you here on Monday again for the Monday Macro Monday market update. And then, of course, you can find me at 12 p.m. Eastern on David Gokhstein's show, The Breakdown, where I'll be talking to him about all things markets and likely dipping into some politics, because I think that they're very much tied together at this point in many people's minds. As much as you try to get away from it, I think it is important to at least know what's going on, even if you don't agree with my outlook on things. All right. I hope you all have a wonderful weekend, wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.